The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of Power Trading Hour. Unfortunately, the gremlins at HotCom are once again trying to give me a hard time, so we'll figure it out. But if anybody is in the engineering booth listening, I emailed Tommy a picture. Anyway, what else do we have going on out here? Well, as we start the day, the market's up a bit in the S&P cash. We've got, up almost 10 points on the S&P cash. Volume is pathetic again. Not quite as bad as last week when we were hitting about 1.5 billion shares on the NYSE coming into this. But, we're probably looking to go higher. We need something like 2.2 billion shares as we start the show. And we've got 1.7 billion shares. So this is not any kind of significant volume push going into higher highs, but actually warning signs once again that we have a market that is incredibly brittle. It may go a little higher. I sat through an entire month of the market going up 2 or 3 points every day in the S&P cash on no volume. But I think, when was it, 2003 or 4 or 5, maybe 6? I'll have to go back and look. All I remember was September like 7th or 8th. And after a month of that, the wheels just fell off the wagon. And it was, I think, one of the worst Septembers on record. I'll have to go back and look at it. Just kind of vaguely remember what I was doing at the time and continue to think about it. Okay. Says I should do this, which is okay. And it still doesn't. So if anybody's in the engineering room, there's no difference. It still will not allow me to select a timed application. And I have sent a picture of it to Tommy. So if you're trying to diagnose it on your side, you can figure it out from there. Okay, what else do we have? I can't do it. My engineers are whispering in the background here for me to do on something, but it is ghosted. It is not applicable. You can get a picture from Tommy, and maybe we can get this sorted out, but it does not work. I am a computer professional. It is broke. Okay, so we got 2440 on the S&P cash. Not a lot of volume. We've seen some stocks. Again, this seems to be one of these things where they're really trying to push a handful of stocks and run some shorts on rather extreme, I'm going to call it very dubious news. We saw a little bit of this last week, and that continues to be problematic, at least for me. I would go ahead and show you my screen, but it's just going to be static, so I don't know what to do about that. I can show you some nice shadow pictures, maybe make some nice pictures, but other than that, all I can do is tell you. And so I'll have to go back to figuring out how I used to do things before there was television and just radio. But we'll look at it. Tesla, TSLA, another dubious upgrade on these folks. Again, I'm waiting for a lot of these to break below some kind of significant moving average. In this case, the 9-day moving average or the 3x3 displaced moving average. When I look at it with the displaced moving average, we kind of got into it yesterday, but it stayed above it. I'm talking about Tesla now. And what else can you say about it? That's pretty much it. There is, trying to figure out how I can describe this. But you got some decent volume today compared to yesterday's down day. Again, this thing is continually short. In fact, let's talk about how short this thing is. Almost a Johnny Carson thing in there, right? But on the worst days last week, actually for 3 days in a row, going into Friday, 30% of all shares were initiated, trades were initiated on a short position. On Friday, just 25%. Yesterday, again, at 25%. But as you can see, no one's really letting off the pedal. That has been around for a while. And again, it seems like, especially in 2000, when we were seeing very lofty balloon-like markets, bubble-like markets that are kind of similar to this in the fact that there's a handful of companies out here that are getting a lot of the love, almost all the love, and a handful of companies that are literally making nothing. But they're not going to the moon, except Tesla, which is the poster child for all this. Loses money continually. Margins will fall as they produce more products. They're going to have to spend another $10 to $20 billion to build out factories to build the products that they say that they're going to get. So the debt is just going to continue to mount and mount as they continue to lose volume. But that just doesn't have much that you can say in that. So we will keep an eye on it. But it's not uncommon to see. Well, I think we talked about this. Was it last week or yesterday? I think it was last week. We're talking about a handful of things that tend to happen in very bubblicious markets right before the market cracks, or as it is cracking. Not everything happened at once. And even if you go back to 2000, the alarm bells were sounding on the first day of trading with Qualcomm going from, 195, 198, if memory serves me correct, that day, maybe 197. 3 days later, the thing was down at 132 bucks, I think, split adjusted. And that was it. We had a lot of factors going into making that market a bubble. One of them was tax policy. We talked a little bit in the last few days, what was it, on Friday, about how there's always an unintended consequence when you monkey around and molest the economy. And I continue to wonder what that is going to be, whether or not it's pushing people into houses that can't afford them, or offering very low interest rates for a very long time. There's going to be something that really snaps at one point, and then that's it. Hopefully we'll get this stuff fixed over the week, break. We'll go back to some charts and some other stuff. If not, we'll just talk about history. More shadow pictures for the show.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That it's all just a little bit of history repeating.
Well, history doesn't repeat itself exactly, but it does rhyme. And on this day in 1986, real-time market data takes a giant step forward, for better or maybe the worse, as Standard & Poor's begins disseminating the value of the S&P stock index every 15 seconds. Previously, the index price was updated once a minute. It's not entirely clear why the ability to check the market 1,559 times per day should be important to investors, but some people are still considering this progress. When I was making the charts, it was very interesting to see that people were yelling and screaming about the price of the S&P 500 intraday. You would get one feed that would still have the 1 minute feed, and you'd have the other one with 15 seconds. And of course, the one with 15 seconds would have much higher spikes in it. And that was always interesting to me. Everybody seemed to lose their collective ability to retain stuff in their bodies on this one thing. But it did make a big discrepancy when I was going through data. Now it's all pretty much down to the 15-second level, although some people actually still do it on a 2-second level. And you can still see differences in the intraday highs and lows, and even quotes intraday. Which one is better and which one is worse? You know, the tick data probably much more important, and that is at any one single time, the NYSE stocks that are on an uptick or on a downtick. And a lot of people don't think about it. But now with so many different ECNs and everything else, unless you get a very expensive feed from the NYSE, those ticks can come about at very different times. So I've seen some tick feeds that are rather bland compared to the output of other tick feeds, which maybe use 1 or 2 second data to get the absolute high and lows and which ones are on the high, which one are on upticks or downticks. So one thing normally you want to do, and this applies to a lot of other things besides the tick, is always try to compare apples and apples, not apples and oranges. Some data feeds will do it slightly different than other data feeds, so you can't just hop about and play willy-nilly with that data. You kind of have to get it from somebody that does it the exact same way every day. I've been working on a data project myself and found out just how much there is to interpret as far as even just the end of the day advancers and decliners. If a stock closes a penny higher and it's $1,000 stock, is that unchanged? Some people actually produce the data that way. Some people say anything, a penny, that's higher, that's all that matters. You know, even on a $1,000 stock, it's sub-noise floor data. If you're getting into technical trading, sometimes those things matter, sometimes they don't. Only until recently have tools been available for someone willing to beat themselves about the head and body and go on to figure out if these things actually do matter at all. Sometimes they do, sometimes they don't. The one thing I can tell you is that you better have, if you're going to use 15 years of data on advanced decline, you better be able to get it from the exact same source. It better not be half from one and half from another. And even other things. I was working on something last night with the VIX. Well, the VIX literally changed along the road, the way they calculate it. You really can't compare the VIX before then to the VIX now. It's been about, 2-3 years? So we've got some nice results. But if someone goes back and says, hey, the VIX is this, well, it wasn't calculated the same way 10 years ago. So can you actually compare that to today? Is it way off? No. Is it sort of off? Yes. So you kind of almost, I'm actually working on something to go back and try to post facto iron that difference back out so I can use the longer term data. And that's proving to be somewhat of a challenge, kind of the equivalent of taking salt out of the stew. You've already put the salt in. How do you get that salt out? Well, generally by making yet another pot of stew, and at least you got half the salt that you had before. But there are some new techniques that will work that out. Trying to work on some other things. But just if you're a technical trader, be aware that data does vary. It does vary a lot. You give me a call at 877-927-6648. Email me at path@tfnn.com. And I think that's about it. Anyway, sitting at 2439, volumes 1.8 billion shares. Certainly looks like we're going to have another light volume day. We're going into tomorrow with the Fed, and that's about it. I can't imagine that we've got, so what are we going to be? We're going to be, okay, the 14th of June. Is there really anything? I mean, I don't think we're going to have earnings early enough in August to really make a difference. I think most of that stuff's going to hit pretty much maybe starting right around for September 1st. So is there anything that's really, truly going to drive this market? Earnings probably won't be it unless you have a handful of early announcements, one way or the other, higher or lower. So I have a feeling that we're going to probably, as technical traders, be watching a lot the dollar index, commodities, and other than that, there's just not a lot to drive this market higher. Certainly not any kind of thing called volume. That's gone the way of the dodo, apparently, at least for the upside. Does that mean that the market has to crack? I kind of feel a little bit like Captain Quig on the was it Quig? In Jaws, where he says, hey, she took down 3 barrels. I just can't believe it. It went down and kept 3 barrels down. Well, I can't believe this market's held up on the rather dubious volume to the upside. I keep on thinking that there's about 5 billion shares that are needed to make a breakout that would change me from a bear to a bull. Unfortunately, the shares and many of the stocks that I'm watching continue to pop higher and then fade throughout the day. And as far as I'm concerned, we had our signal, and the market's pretty good about it. It will tell you, hey, there's danger ahead. Most people will get that 2 or 3 times warning at highs, and yet they still will not heed the warnings. They will wait until they get clubbed. You had an easy time to get out last week. You have an easier time to get out over the next day and a half. I just don't understand trying to make 9 points higher in the market when you see danger everywhere. That's just me. Give me a call. Tell me why I'm all wet at 877-927-6648. Email me at path@tfnn.com or post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, I've got 2 good questions, so I'll go ahead and answer both of them. One question was, were there any kind of stocks out here that had pops and drops? And to me, it was the dubious news. But if you look at the SMHs, they opened higher today. They're going to have very light volume, under 3 million shares right now compared to the 8 million shares yesterday as we went back and pierced this last gap up. from 519. That's May 19th if you live in Lutz. Anyway, that was only 3 million shares, so you pierced it with 8 million shares. Now, if you're watching on Tiger TV or in the Den, I've got the 3x3 displaced moving average. Now, just like Apple kind of did, I'm suspecting you're going to have a little bit of a recovery. Apple was the, of course, biggest dog on the street, and now that it has fleas, I think you're going to see the same kind of thing, which is you get a little bit of a bounce, and then the resistance starts then coming back in by that 3x3 displaced moving average as it turns back down. The one nice thing that the 3x3 has that the standard 6 or 9 day moving average, whatever you use for your short term, doesn't have is the ability to kind of show you when this thing breaks in and breaks down out of resistance and levels. But that's kind of the prediction level. After you break, you can come back up. So maybe you have one more day out here, and then you're going to run back into the down turn that I think is in these SMHs. They've been highly bloated. Apple kind of had that a little bit this morning. Man, they were pushing this thing out of the gate. Let's take a look at this one. Same kind of pattern that we saw in the SMH. 26 million shares so far compared to 72 million shares yesterday. I think that says it all. So what else are you going to do, right? You're up, fairly light volume. Ask for 3, I'll think about another one. Wanted to get to another question, which was, how do you handle the open float changing over time? And that's exactly what we want to do. In fact, one of the best reasons for me having some of this stuff, TWTRs is it, is that volume or the outstanding float doesn't all change in one day. It may change over time. So when I'm using my power law vector indicator, we're not talking about looking three or 4 years back or something. If it's off 2% in the last time, like Twitter, probably doesn't have a lot of change in the open float. But if we're going to see volume and or energy come back in, this will take care of it, because it is much more like the way electricity and your, how can I say, your meter on the side of your house works. That is, it measures energy as a form of the ability to move, i.e. price difference, with time and volume. So I would see that in the short term, let's say last 6 months or something, unless somebody goes out and buys up, 5% of their shares in a couple of months, it's not going to go and whack that. So I kind of start right there. As Twitter, is this thing, it's coming back on kind of lighter volume out here after it did rally up to 1978. But I'm already getting an indication that this thing is fairly tepid on its way back. I'm trying to think of a good stock that had a lot of buybacks lately that I could show you this on. But one of the things that you have to look at is just how long it takes for those share buybacks to come through. The other thing is that very few stocks actually have significant buybacks. They announce tons of them. And I think I saw an article maybe late last fall that showed that out of all the buybacks that were announced, less than 10% of the shares actually were ever bought. So you will see that. You'll see some huge announcements. We're willing to buy 5 billion shares back. Well, IBM did that for what? How many years? And it didn't matter. Eventually, you have the exact same thing, which is as soon as the buybacks are over, maybe the stock price is a little higher than it would be if there were more shares, but I don't see any big difference now. Again, within a 6 months time frame, which is normally I'm trying to get my power law vector indicator set up for something like 7 to 21 day moves. we've just had much bigger moves here lately. It just doesn't change that much. So, yep, I think that's it. I think you can take a look at it. It just does not change quite that much. And again, if we go back and look at Apple, I mean, the signal on Apple wasn't anything that changed over the last 6 months. It was that this thing had 26 million share high on May 15th and only had 21 million shares going into June 7th. And I think that's much more. I mean, it was 5 million shares off the high, although everybody knows that this thing's going to $5,000. People just weren't willing to buy it. So continues to be one of the things I look at a great deal. The big QQQ had 5 minutes. Okay. Apple reduced float too. I'm sure they did. Doesn't seem to make any difference in the way that it operates. If it had, saying that maybe 0.2 in 2 weeks made any difference of the shares outstanding in the float, don't think so. So I'm not one of these guys that goes back 10 years, if that's the question, and says, hey, volume was so-and-so. I tend to think that a lot of this stuff does cycle out of the market in about 18 months. So I don't tend to go that far back. I tend to kind of look and tend to my knitting. In fact, my tests every day tend to be all these stocks that have just come back and tested previous highs on lighter volume or previous lows on lighter volume. So a good indication of using volume correctly would be a February 24th high on Excelon Corporation, EXC, February 24th. Not that long ago, even if they were busy buying shares, wouldn't matter that. You had 8 million shares. Yesterday, you had a challenge with 5.4 million shares. It pulled back a little bit today. Now, the energy back off its low, again, going back to my power law vector indicator, is actually fairly decent on the way up. So I wouldn't consider that as a short. I want to see volume shrink from that May 10th low, not expand. It did expand and had kind of a big day out there, which is one of the reasons why. Other stocks that come back down, let's take a little shorter look at it here, is rocket fuel. Again, a couple of weeks is not going to make that much difference in the change in outstanding shares. May 18th, $2.71, 1.1 million shares. So far today, just 500,000 shares. If we close the day out, that would be a fairly decent signal of half the volume at a low, which we look at too.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And having an interesting conversation in the den with our previous host in the hour before, Steve Rhodes, talking about IBM. Says that they've lowered their float by 34%. And again, that's all great. The only thing I have is they've bet everything they're going to ever be on Watson. Its biggest single shareholder was, of course, Buffett, and he's Amscray Adelaide. And the question is, he sold 1/3 of his shares. Is he going to sell the next 2/3 of his shares? And I mean, this thing's, he even bad-mouthed it himself. I think he's trying to get rid of the CEO. To me, the bigger bounce out of this thing, and one of the reasons I wouldn't want to be short, is that she gets axed. And we get the same thing that we get with General Electric, which is a poorly performing company actually goes higher because they get rid of the CEO. But this is a one-trick pony now. It's all based on whether they can sell Watson. And the interesting part about Watson is that it's a huge system. They are selling the hardware and the software and the programmers and everything. It's not kind of an a la carte thing like Amazon Web Services or Google's Web Services or Microsoft's Azure, where they're doing a lot of different things and a company can come to them and just host on them and use their products. IBM's kind of a one-stop shop. You just tell them what you want to do and they do it all for you. Question is that model broken these days? And the only reason I can't say that Watson is either going to be a success or a failure is that they deal with so few customers, i.e. other Fortune 500 customers, that you don't know. You know, there's just going to be the announcement. If you deal with Amazon Web Services, it's pretty easy to go back and get third-party results. Let's take a look at Amazon real quick. How much data, what they have coming in, and there are a lot of customers. So if they start losing a lot of customers, it's not, you know, it's something that gets reported fairly quickly. If you have 5 big customers, it can be feast or it can be famine. And I thought IBM really had a good setup, but if you lose the faith of somebody who seems to never lose the faith, like Buffett, I always wonder what's going on. And it's hard for me to think that, you know, maybe he just sold those shares so he could buy them back. Don't think so. I think he reduced his risk, and there was a reason why. And probably until that CEO is gone, I would neither be a bull or a bear on IBM, other than the general market. Now we're going to look at Amazon to see what's out here. Well, this is a huge sign of strength. Sarcasm on. Yesterday, 9.4 million shares. Today, 3.5 million shares. A little higher out here. No juice, especially compared to the down day of 7.6 million shares on the 9th. So we're going to be a volume light as we go back into these highs. Now, Amazon, I think, has firmly taken the reins as the big dog and a big man on campus. With Apple flailing, that is, I mean, it already kind of was, but now this is the stock that I think is going to make the biggest changes in the indexes over a little while. I've always said that there's absolutely no way that you could get me to put money long in this stock, not because I don't think it's going up, but because the one-day risk of a headline like Microsoft had in 1990, was it 8 or 9? 1999, where it lost a third of its value in one day, comes along with an antitrust suit. I think that this is highly likely. I don't know if it's today or in the next 4 years, but my guess is, especially with a guy that they hired for or that's probably going to be the next FBI chief, this is right up his bailiwick. And Amazon has a long list of transgressions in this space also. That's why I would only be playing these very expensive stocks right now, even if you were bullish, only with options. They're fairly cheap, and you're going to have a much lower risk out here to the market, especially now that we pulled back a little bit. What else do we look at? Let's look at a few other ones. IM Gold. I wanted to see how this one responded today. It had gone through the previous high of February 8th that had 16.6 million shares. Right now, what do we got? 9.5 million shares. Let's go back just a little bit further here when we look at this. Now, this is going back into this big gap down that comes back to August 9th of last year. This came down on 22 million shares. So we're back into it with half the volume for IM Gold. If you were long this thing, maybe it's one of those things where it's kind of time to think about taking a little money off the table out here. You got half of the gap, and normally that is where you get, this thing's kind of come off of it a little bit, and that's normally when you've got just about all your money. If you're still bullish this thing, you're going to have probably a long consolidation before it heads higher. Kite, K-I-T-E, was Kite Pharmaceuticals. Bouncing around its highs going back to the 13th of March, did so on 2.9 million shares. Got into it a couple days ago with 2 million shares. Yesterday, 1.3 million shares. Today, just 600,000 shares. So again, volume is incredibly light. Not a big deal going into a Fed meeting. We are expecting lighter volume. Normally, if you're bullish, though, of course, you want the market to pull back on lighter volume, not go higher on lighter volume. Another one is KLX, which is the high out here. How much overseas cash does IBM have? March 1st, $52.40 on March 1st for KLX. What did you have yesterday? 400,000 shares. So 150,000 shares light on 550,000 shares. Today, 327. So you're probably going to have just slightly higher volume, but back up the highs. Not a lot of juice in that one. Now, here's where I like the setup in this one, and that is off this March 27th low. You had energy coming in at about 25% less than from the March 1st high down to that March 27th low. So again, light volume and highs. You also want to look at how the characteristics of that volume is on the way back up. Was it vapor? And then, it just drop out at the highs? Always interesting to take a look at the character of it. Legg Mason, one of the big men on Wall Street, to back on, what is this? The 11th of December 2015. This came down with I don't know, call it 2 million shares. Again, yesterday, 828,000 shares. Today, 300,000 shares. So a lot of these stocks look like they are fairly long in the tooth and have taken kind of a lot of energy to get back up here. At a minimum, you would probably expect some kind of pullback, and maybe this thing gains enough energy to get back up through that gap. Fairly significant, 2 million to 300,000. I think that's plenty. We'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to look at a few other ones out here. We looked at Legg Mason. Let's take a look at another one. Now, this one had news out this morning. And I think this one's going to get the loser horn for the day. Not a lot moving huge, but it was earlier in the day. Down on fairly decent volume is Science Applications International, SAIC. And again, I would have liked this thing to got to about 84 to pull the trigger on it. We've got a lot of stocks that have this setup. Maybe another day or two, and they're going to look a little bit better. And that is that you had some huge gap downs. In this case, this one was on the 30th of, what was it? 30th of March. Came down with 2 million shares. and you had a big gap on that day. Now we got back into it with kind of a sign of strength, but that sign of strength was just a little under 800,000 shares going up against that 2 million share day. And probably a good reason to talk a little bit more about how I do volume. Down today, by the way, on 1.6 million shares, which is what? We're going to do at least that huge volume down day of the 30th. But I don't look for when volume is just 5% less or 10% less. Steve Rhodes has a good case to be made, which is, of course, what are you looking at? Buybacks, can that move it a little bit? Maybe you get 5% of the shares in a year pulled back. That's great. But when you get back up and you got half the volume at a previous high, that 5% seems to fade into insignificance to me. Now, if you were trying to trade, as I did early on when I learned this stuff, 10% was a big deal back then. Now, this is before high-frequency traders and everything else. But, you could find stocks that gave fairly decent signals with just 10%, both in the highs and the lows. Now that has changed. And if you listen to my shows pretty much, I don't talk about when volume shrinks 5% or 10%. I mean, I pretty much talk about it when you've got stuff that is so blatant that a blind man can see it. So there's not a lot of equivocation out here. If you had 10 million shares 2 months ago and you had 1% of the shares bought back, but you only have 5 million shares today, don't think that is the I don't think that has a lot to do with a formula out there. I think you can see that equally or easily dwarfs any kind of moving target that you have out there. Anyway, this is interesting stock. It looks like it's at least going to get back down to the $69.99 low from April 17th. So we'll take a look at that. Had somebody want me to, in the email, to go back and look at JWN, which is Nordstrom. I said that I thought the news of a buyout was incredibly highly optimistic, and at its worst, probably totally fake news. Again, almost incredibly, who wants to buy the last store in a mall? This is kind of creepy. In fact, they had a story today that said Ghost Mall. And I thought, yeah, that's probably what they're going to be used for this October. They're probably going to be used for Halloween events. You could go from store to store that's empty and have your little Halloween event in one. One of my favorite movies, Chopping Mall. I wonder if anybody remembers that one. Anyway, highly dubious news. Has this been able to continue to go higher? It hadn't. You had one day where you squeezed all the shorts. I want to see what this one does tomorrow. To me, that would be very interesting. Hard for me to believe people want to throw a lot of money at a business that looks like it's going down faster than the Titanic after it hit the iceberg. Be back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.